Hey, Alpha fam, welcome back to another episode of Alpha Commission. Of course, today we'll be talking about inflation and the massive dump in the stock market that, of course, is following the inflation numbers released today, those CPI data. Of course, previously we had talked about how the PCE data, which the Federal Reserve uses primarily, was actually fairly positive. It indicated the possibility that peak inflation was approaching and that therefore perhaps the Fed could, step back a little bit in how aggressive it's been on the markets in terms of trying to cool the markets from all the liquidity that has just saturated every corner of the world as every government was just printing money, that era of money printing, of course, for the last couple decades, but in particular during the COVID era in 2020, and in some cases continuing through 2021. And who would have thought that all these lockdowns and all that money printing, could have some repercussions that might need to be paid back in the form of inflation? Well, everybody did. Everybody did. But, in their infinite wisdom, the government decided to do it. And of course, we've just been seeing the consequence as the markets have been declining ever since November. And, we don't really know where the bottom is because once you enter a period of inflation that can't get be, pardon me, that reserves can't get a hold of, there's the possibility that you can enter a period of stagflation. And of course, that suggests the possibility of recession. And so, all of these things combined together, but stacked up globally, could indicate a global recession. I believe, out of the, 38, major countries that participated in, the kind of Western surveys like 6 months ago, only two of them thought that they would have inflation over 6%. Now they almost all do, right? They almost all do. And the number is 8.6% for the US. We're not alone. This isn't a US only thing. Some people thought that I was being too hard on Trump, when I was discussing how he just printed, hand over fist of $5 trillion, and people want to ignore that that didn't happen. Of course, Biden continued those policies, but we have to be honest about our past. We have to be honest about what all these politicians are doing. And when you let states, when you let, these different agencies, run the government, for example, during the Trump administration for about a year, I thought Anthony Fauci was our president. I mean, did any of you like think that like Anthony Fauci, it was President Fauci? I mean, I really got that feeling. I mean, we had the president of the United States, right? President Trump invoking basically communist style policies where he invoked, World War II legislation in order to take over factories and start printing, trillions of dollars in order to produce vaccines, and took over private property. The government, took over private property in order to make vaccines and then locked us all down and just kept printing money so that the stock numbers would just go up, right? Just a burr, printing money so that the stock numbers could go up and so they could cover up like everything that they were doing, right? As long as the numbers in the stock market were going up, hey guys, everything's so great, the economy is so great, right? What the heck happened? What happened? And no, I'm not putting this on one guy. I just literally said, Biden continued that, and I'm also saying that governments all over the world were doing the same thing. It's shocking. It's a scandal. These guys cannot be trusted, okay? Don't pick a side in this, okay? Like what they're getting us into and where we are today is because of these attitudes of, just it's just arrogance. It's narcissism and it's arrogance. They live in a bubble. The leaders that we have are not appropriate. Trump was right. Our leaders aren't smart. We have stupid leaders. He was one of them, right? Biden's no better. I mean, they're trying to grapple with inflation right now, but to be honest, I mean, let's be real, okay? This isn't like some genius move on Biden. It's because they have to. They have to, right? Their arm is twisted. Like we are going to, have hyperinflation, which that didn't work out too well for the Soviet Union, right? We're going to have hyperinflation if we don't get a hold of this. And so, how are they going to solve it? Well, there's two ways. The first way is to crash the stock market. Why does that matter? It's hard for a lot of people to understand the relationship of the stock prices to investments and hiring of employees. It's based upon how the U.S. System, in particular, like probably the most strongly tied to the stock market in terms of investments and hiring and the ability to deploy cash for those means. When your stock price goes down, you can't do that. Now, you might be thinking, well, doesn't that, shouldn't that be based upon like revenue and things like this? Well, again, like this could be a whole hour-long discussion just by itself. But if the stock price goes down, the way that the US economy is oriented, the way that these systems are set up, companies don't have access to the funds that they need in order to keep payrolls and in order to expand operations. So when you collapse the stock market, which by the way was run up artificially, right? It was just political BS and a bunch of people scratching each other's backs in these elite circles, right? So these numbers were absurd to begin with, okay? Like we're probably not even at levels that we should have been in. We're probably higher than levels we should have honestly been in. And so what does that suggest? That there's probably more correction left to be had in the market because this was just like cocaine fueled money printing, okay? And and I don't mean that I mean that literally. Like these guys, like they pretty much just do cocaine and take your money and print additional dollars so that they can drive up their own stocks. And then their friends in business, they use free money, these government handouts, these subsidies, right? And they buy back their own stocks, and so their stock prices go up even more. And if there are crashes, you know what they do with our money when the stimulus comes out, right? They just buy up those cheap stocks, right? They just buy up the cheap stocks, and so then they get paid. They get paid twice, right? And they don't have to pay it back. It's stimulus, right? So look, guys, you can tell I'm a little bit excited about this. I had hoped for some better news. This isn't how governments should be run. Like something's wrong with the entire world right now. The way that all of these governments, just look at Europe, it's in chaos, okay? I mean, what the heck is Russia and China doing? Th- Both of them are in chaos. It's absurd. It's insane. I mean, they are actually worse than we are. They look, from the outside a little bit more organized, but it's only because they have dictators that are like running the show, and they're basically thugs. They're basically thugs who are just getting ready to mass murder a whole bunch of people, right? So that they can hide their own problems, and they just hide it very well because they're dictators. Like you look at the North Korea, it looks highly organized, but you just skim a little off the surface, right? And you can peer through the veil, and you just see how insane it is. It's just insane, okay? That's what Russia is. That's what China is. I mean, we're screwed up over here in the US, but we're not that bad. But guys, like the world is getting crazy again. And I mean again, like these are like pre-World War II, pre-World War One levels of craziness. And I'm not trying to scare anyone. I'm just saying, like, we got to get this stuff under control. And the Federal Reserve, I mean, if they're going to make a dent in this, they really need to get, these interest rates higher. They need to get them higher, and that's going to crash the stock market further. So now we're expecting to have interest rates all the way through September at a minimum, which suggests the markets are going to keep just going down. There could be another 4 to 6 months left of this. Um, that's if we're able to escape a recession, which we probably might, not be able to because of how late they've been in taking action. And again, like it's Jerome Powell. I mean, this guy was the Federal Reserve chairman with Trump. He was the Federal Reserve. He is the Federal Reserve chairman with Biden. And I don't know. I don't know how Biden and Trump are on the same side in terms of having hired Jerome Powell and put him in charge of basically the world's money because let's face it, the world operates on the dollar. But there must be some very, very disturbing back scratching and favors and just a cabal of shady figures that made this happen because anyone else who fails at their job that bad would be canned. And so these guys have something over, and it's just becoming more obvious every day. It's just becoming more obvious every day. And guys, you know me, I'm not a conspiracy theorist. I don't, I don't go for that. I use the facts that are on the table. And I'm just saying, like, we have to get beyond the Trump camp. We have to get beyond the Biden camp. We have to get beyond the deep state, whatever that is supposed to mean. Okay, just the establishment that's just been going like brain dead since the end of World War II. They've just been I don't know what's going on. Half of them are just a corrupt elitist, and the other half are just bureaucratic, just nodding their head at everything. And it's it's crushing. It's crushing the world economy. You can see it. We're going to have a very tough time getting through this, and I wouldn't expect things to go the optimistic path personally. And wow, okay, yeah, these numbers. I mean, just look at this chart. I mean, this is not good, right? We had a bull flag. We had a chance to pump. We had the chance for a relief rally, and we're just not getting it. It looks like we are going to take the shortcut down on this fractal. And I was showing you guys this fractal from what was it, 2008 or something, and it's just we look worse right now. We look worse right now. We had a little bit more optimism of up here, but we look worse right now. We look like we're on the fast track to heading down, and my guess is this isn't a fake out. Looks like we're going down so fast. We're printing some of these CME gaps. Gonna have to delete this, right? The CPI data was bad news, so gotta delete that possibility of a nice bullishness. Hey, the PCE data was good. Okay, the PCE data that we got a couple weeks ago suggested the possibility of the potential for peak inflation, but obviously it's not happening. I wasn't really buying the PCE data, But you know, sometimes they cook the numbers, and you know what? They didn't cook these numbers. Or if they did, that makes me even more worried because if these are the cooked numbers, then yikes. What are the real numbers, right? So, guys, you know, I think we may be headed down to these lower levels, you know, these levels that I wasn't sure if we're even going to touch, but now maybe we do. Maybe we do, okay? I don't think that we're just going to get some type of double bottom. What could possibly come out? You know, what kind of news could possibly come out to give us a double bottom or something, right? To give us a higher low? I'm not sure. I can't think of anything. Okay. Well, on the 15th, the Federal Reserve will make its decision. And, you know, I already told you guys that Europe, you know, was thinking about increasing interest rates for the first time in a while. They had negative interest rates, actually. Well, now they have positive interest rates, and they raised it by it's just a measly quarter, 25 basis points. The market needed them to do better than that. The market needed them to step up and have a significant interest rate increase. Those interest rate increases need to start approaching the levels of inflation. You understand how that works? They negate each other, right? They cross each other out. And so if you increase the interest rates fast enough, you can kill inflation early on. But if you wait and if you sit on your hands and if you don't take bold steps early on to fight inflation, then it can just get out of control. And as it rolls around and it ramps up, you you would have to just increase rates just faster and faster, you know, down the line and bigger increases, which is just going to cause recessions, right? I think the recession is unavoidable now. How do we not say, you know, that you know, how could we say that we could escape all of this? I don't know. I don't see any way around it. So, yeah, maybe the Fed is going to increase interest rates for the next 3 months at least. But, you know, the market is pricing in 50 basis points for the next three Federal Reserve meetings as opposed to the next two. But, you know, how do they get a hold of this problem with just those, you know, measly levels if inflation is actually increasing faster than expected? So, I don't know. I'm not optimistic about that. Yeah, these CPI numbers actually hit me just like it's hitting the stock market, and you can see, you know, we gapped down, we fell so fast. You know, my levels here might not be drawn perfectly for everything. It looks like we're getting a little bounce in this area. You know, maybe this is the support, right? Getting some bounce there. Or maybe we just gapped and just blew through that. But yeah, look at this, just straight down, right? Straight down. Yeah, so the S&P, the Nasdaq, you know, the Russell, these things aren't looking good. Or sorry, me, this is the Dow Jones and the Russell. Russell's actually holding up the best. These are the smaller businesses. Wow, the dollar is it just screamed up. Just screamed up. Cash is king right now. Wow, this is gonna make an all-time high. I mean, for the recent era, how far back do we have to go to see these prices? What? What? This chart is just not old enough. Let's see, do I have an older chart? There we go. All right, so the last time we were in this area, it was 2002, okay? And actually, we were spiking up there. It was 2000, the year 2000, right? So that was the dot-com crashes and all that good stuff. So yeah, I mean, we're kind of doing it again, right? We put in this type of a low, and we're putting in this type of, I don't know what you want to call this, but it looks like it's just kind of a mid-range on a diagonal. And then probably we're going to form another top kind of like this, right? I mean, I would just guess the way that the world's going. And let's see how our volatility is today. Yeah, just pumping up there. This is that formation that I was telling you that most likely we weren't going to keep dropping. Most likely we were going to curve back up. And yep, there we go. Just put in that curve, popping straight up that volatility, threatening to approach those 40 levels again. And that 40 level is a killer, right? You approach 40 on this volatility chart, and you can just kiss the market goodbye, basically. You touch that zone, and you're really probably getting at the bottom there. But we've been middling around for quite a while. Even some of this low volatility area, it's not really low. It's just good trading levels. This would be really low. But just this middle area, it's okay. It's okay. You can still attempt to trade. That's not good trading. You can attempt to trade. Above 30, it's pretty bad trading. And then above 40, you may have bottomed the market, That's how I interpret the VIX. I mean, other people will have different levels and different understandings, but that's how I understand it based upon our relative position and our relative volatility compared to the past. Okay, you can kind of see how this thing flows. It's quite interesting how it gets scoops, It's like volatility moves in waves, like waves breaking on the ocean shore. Gold not doing its job, right? Gold just not being a hedge against recession here. Bitcoin, likewise, not being a hedge against recession. It's holding up better than I thought, but yeah, I mean, this thing obviously is threatening to break its lows, at least on this little range that it carved out. And that might suggest that maybe we even come back down to these areas. And if that does happen, we've been talking about these EMA crossings. And what was it? The 3-day and the 4-day? I think I marked it off. Yeah, on this chart. Yep. Marked it off. Look at this. Yep, that's just aligning perfectly, right? And I said we're going to have this across here, right, on the 3-day. I know some people are talking about the 4-day cross. Crypto Crew was talking about that, but I see this a 3-day cross, still working on the 3-day. And that could come. I mean, look at that, June 18th. So that's pretty close to the Fed's meeting. I mean, these lines could be off, right? Like maybe this is a little bit closer. Could be the 15th. Maybe we just get some really bad news. The market just really doesn't like it. But we're going to get this cross that's pretty bearish. We got another bearish cross right here. And then on the 4-day, yeah, we had that cross. We had that bearish one, and we're dropping, right? I was talking about this with you guys. You know, I made a big old video about it. You could almost predict it based upon the EMAs. You didn't even need the CPI data or the Fed. You could almost have predicted it with the EMAs. And then we look back here in 2018, what happened? See that kind of bearish cross right there? Same one. And you go to that 4-day. You get this one right here. So we're really talking about similar ones. It's just, you know, you can look at the 4-day or the 3-day. It's pretty much the same time period, right? But you can pretty much see that that region was pretty unstable when you get these 3 or 4-day, you know, 20 and 200s crossing, and when you get the 50 and the 50 and the 200 crossing, right? So you get those things crossing. And I mean, if we go by the past, it's resulted in a pretty interesting drop. How big was that drop? That was a 26% drop. Can't really talk about this era, that's COVID. And what do I have over here? Yep, I already marked it out for us. That would get us in that $22,000, $23,000 range. I mean, this might be playing out, guys. You know, there might only be a week before this actually plays out. Everyone predicting the pump to like 40K or whatever. I mean, it could hypothetically happen. When you get so far away from your EMAs, they tend to like to pump back up, right? You drop and then pump back up. It's just how markets move. Drop and pump back up. Even if you go down, you tend to get a pump. But we have just been so flat. I mean, we could still pump. We could still tag those EMAs and then go down, right? Like you don't actually have to do it just one way. But the question is like where would that energy come from? The market doesn't seem to be filling it right now. Look at this price; it's just dropping. Just continues to drop. Right? This is getting sloppier and sloppier by the minute. Lots of buy orders getting filled. Just kind of a nice bottom of the range here, right? So everyone likes that. They had their orders at the bottom, right? So they can kind of trade this range. We're gonna have to break this range. We're gonna freak them out. They've just been doing this, right? Making tons of money. Good money, good money, good money, good money, good money, good money, right? That's the thought right here. But we break these lows, you know, you're going to liquidate a ton of people. And we break this low, I mean, we're guaranteed pretty much just to be going down. Probably revisit those 25, 26 areas first. Not much to say, just wanted to point those things out. We have that crossing coming up. We have the bad CPI data. We have the Federal Reserve making decisions. My friend Retta made a stocks chart, stocks list. I mean, look at this. That is some pretty red charts for today. I mean, I'm seeing like 3% all over the place, seeing at least 1% all over the place. I mean, 2% seems to be the average. Just skimming through it, a little less than 2%. China looks pretty good. China getting a pump off of all of this chaos. Look at the Russian ruble. Looks as strong as the dollar. Now that everyone's basically buying black market oil in rubles, right? Meanwhile, the euro is basically the ruble upside down, right? Ruble, euro. Whew, boy. Yep. Let's see how this goes. Well, this is paired with the Moroccan dirham, so probably need to change that one. There's the US one, the US pair. Let me remove this one, just confuses me. Yep, so BTC dominance. Looking bullish. UST dominance. Whoa, people just you can actually see it pumping. People just getting out of their coins back into USDT. And my guess is that this is slopping over a bit. Like you can say, oh, okay, well, UST dominance is going down, so that's a good sign. Not necessarily if they're getting into dollars, right? If they're just cashing out, if they're selling their coins, they're going to sell it for USDT. So USDT is going to rise overall. But then USDT might reach a maximum point where then, it's just people kind of taking their money out of the system totally and then, selling the USDT in order to put it in dollars. What you want is for them to sell USDT and put it into, altcoins or Bitcoin, right? You don't want them to just be leaving the market. And my guess is a lot of this consolidation is people just leaving the market. And that's why USDT has stopped going up so much. Like, I don't see this stability as a good thing. So our volatility is, I mean, this is a weird This is a weird bottom. It should be expanding. It's still contracting right now. That's interesting. I have to keep a look on that because the price is contracting, and so if the volatility is contracting, then it might suggest that if the volatility starts expanding, that there might be some upside. So, but this thing can continue to contract for a while. And in some sense, it is kind of logical because we started contracting very severely in this area. Let's go to the weekly. Maybe the 5-day. Nope. That was expansion. Yeah, gonna have to watch that. It's just implying that there's a big move to come, and sometimes the upside and the downside. This is not an intuitive indicator. Okay, it doesn't tell you direction, so you have to kind of infer it. And right now we have all of our indicators pointed down. So if we have volatility expanding, we would suggest that it would be expanding in the direction of the indicators. Potentially, it doesn't have to, but more often than not, it does. It's kind of like a moment of chaos, right? But yeah, we're just gonna have to watch that because this thing is so on the floor and has so many, just flashes of indications. We had this flash right here, and we got this drive down, and this one is just kind of like screaming, but we're just going sideways. So it just suggests something's building up. And it's on the 2-day also. This is very borderline. So we'll just have to watch that. Alright, guys. Not gonna take too much longer here. There was something interesting that I saw that I wanted to point out. Let's see. Where's that one? Yeah. So here's some alpha. If you guys are into NFTs, Nickelodeon has an official NFT page, and their first post was only, yesterday, basically. And they're saying, yeah, it's for real. This is the real Nickelodeon. And, everyone loves these old cartoons,
2, 4, 6,
right?
6, flat.
So
Me and my generation.
they're probably going to be coming out with some interesting kind of retro NFTs. I don't know, might be good for a trade. So keep your eye open on that. They have very few followers considering how big this brand is right now. And again, their first post was only 24 hours ago. So you're going to be in on this a little bit early, right? Says the 90s called, they want your attention back, right? Yeah, if you're reading this, you're early. So there's your alpha, right? And yep, just be cautious today. And in fact, be cautious all the way through the Fed meeting on the 15th. Sometimes there's a bounce ahead of time, kind of a fake out bounce, and then the markets get trashed. So be aware of the fake out that comes around these type of things. Just like sometimes there's buy the rumor and sell the news, or sell the rumor and buy the news. Both of those patterns, can happen. So just to be very aware that we are in a very, very, very trappy area, and everyone's looking to get each other's money right now. That's why we've kind of been holding this range. The bears and the bulls are in a stalemate, but at least for today, the bears are winning. So it's your alpha for the day. Don't forget about Nickelodeon. I'm not a shill for them or anything. There's nothing to sign up for yet. It looks like they have a Discord now, so might check that out. But hopefully that turns into something. Stay safe and happy trading.